Hi there folks, it's Matt Hayson here looking at this week's property market, and we're set for a very dynamic finish to this year's market, that is for sure. Let's get into it. Bringing up this chart here on the auction market, and you can see here for the second consecutive week in a row, the final clearance rate in Sydney sub 50%. Now this new trend which is starting to emerge would suggest that there is some weakening unfolding in the property market, and as I reported last week, the last time that we saw that trend line of a sub 50% auction clearance rate, at that point in time last year, property values were actually falling. Now it does come at a very interesting time because CoreLogic have just released their latest data suggesting that all of the losses from last year, where we've regained all of those and we've re-hit the same peak in the market as was experienced during the middle of the pandemic in April 2022. So we could start be seeing this reversal in price growth, and we'd put that down to several things that we're seeing at the coalface of the market. The first one is that we are seeing that buyer fatigue creep into the market, and that's very evident each and every year. But then that latest cash rate increase to 4.35% has really noticeably dented buyer confidence. And then we've got this tough talking RBA at the moment that is suggesting that inflation is very much a homegrown issue and is absolutely embedded in the economy. So this is really concerning for those that are looking to make a buying or selling decision at the present time. Now, speaking of inflation, Australia has just topped the mantle, and it's a mantle that we don't want, of leading the 15 largest and most advanced economies in headline inflation. Now, our politicians absolutely have something to answer for as they've opened up the floodgates to migration, and as a result, in Australia, we now have too many people fighting over too few goods and services. The RBA Governor, Michelle Bullock, is very much aware of this and said we can no longer blame global matters around inflation. It is absolutely a domestic problem. And the RBA has no problem in lifting up their blunt hammer and using it to lift the cash rate and hammer out inflation. Now, it is expected that the RBA are going to leave the cash rate on hold when they next meet in December, but Ms Bullock is remaining to talk tough and suggesting that the cash rate will go higher and remain that way for longer. And again, this is another thing which is weighing heavily on those who are looking at making a buying or selling decision. And then finally this week, one of the best property analysts in Australia is Louis Christopher from SQM Research. And this week he released his annual boom and bust report where he forecasts what could unfold with national property prices in 2024. There are 4 case scenarios in there, and today I'm going to focus on Sydney. And you can see here for the base case scenario for Sydney, doesn't make for pleasant reading, where Mr. Christopher predicts that there could be flatline growth for Sydney, but we could also be experiencing modest price declines of up to 4%. In his most optimistic outcome for Sydney property values next year, he's suggested that property values could decline by 1%, but maybe see modest gains to 3%. So looking ahead to 2024, according to the boom and bust report, it could be choppy waters for the property market next year. But if we move all of that to the side, it's very important to see what we are unfolding in the market right now, and everything is that cycle. And what we're seeing with our open homes right now is good value is starting to come to the surface, and very good opportunity is available for those that are paying attention. And that leads us into this weekend, folks, where we've got some amazing properties open for inspection, and we look forward to seeing you out and about, and I'll catch you all next week.